Some big moves in smaller cap internet stocks this week, including recent IPOs, Duolingo and Warby Parker. Joining us now, Mark Mahaney, Evercore's head of internet research and author of Nothing But Net, 10 timeless stock picking lessons from one of Wall Street's top tech analysts. Mark, great to have you with us as always. And good to dive in today on some of your top smaller picks. And let's start with Stitch Fix.
Okay. Yeah, it's nice to get beyond, thanks for the plug on the book, by the way, but it's nice to get beyond all of the mega cap names. And there's a series of these mid small cap names, market caps less than 5 billion, less than 10 billion. I think there's some interesting names in there. Stitch Fix is at the top of our list. Now, this stock has traded down aggressively year to date. There's an enormous amount of skepticism on the name, and maybe for good reasons. That all said, we think it's a good business model. It's trading at roughly 1 times EV, 1 times sales. And we think they've got a nice product development catalyst in that they've rolled out more and more what's called direct buy functionality, or the ability to really kind of do on-demand shopping with Stitch Fix as opposed to just their core subscription business. That's why we like the story.
And your price target and the upside?
$68, so that's almost a double from where we are today. That sounds super aggressive, but I look at these names, especially when you get into small cap names, you can see really very quick re-ratings and de-ratings too, but you can see a lot more volatility in small cap names. So, they're small cap usually for a reason. The market cap, the market opportunities aren't as big, management teams aren't as well tested, but that oftentimes means that there can be great opportunities, a lot of risk, but great opportunities in those names.
We want to get to some others, but first on Stitch Fix, because we do have Elizabeth Spaulding on this show all the time. Why do you think there is so much skepticism around this stock and this story? Is it just that market has trouble with subscription services?
I think there's a question. They have about 4 million active customers, and the question is, do they only have 4 million active customers in the future? So there's a debate about just how extensible, if you will, the value proposition is. Look, I generally prefer founder-led companies, and the founder CEO step down, so that's always a negative. That's almost always a negative tell for companies. We have had a lot of management change here. And then third, there is kind of broad competition when it comes to purchasing apparel online. There's a lot of different ways to do it. The real question is this mass market? Is this too niche of a service? I think that's really, it gets to the question of how sustainable is the growth rate. And for about 2 years there, you had deceleration, the number of new customers coming in, and the bears jumped on that, maybe correctly, saying that tells you just how limited the TAM is. Until you get real acceleration, sustained acceleration, the TAM's limited. But if that changes, there's a lot of upside to the stock.